US, popular on the GBP, but they are deeper, bigger, detailed ones that nobody talks about them. It's boring when you are not in that field. Yesterday I was on the live and I was telling people that I only exert interest in learning up to this deeper part because of where I want to go in the next few years. If I was only satisfied with the comfort life that I'm living in, these things are rubbish. I don't need them. I have to keep repeating the things I do. But I'm telling them that the things I do now, they can only go as far as managing some couple of dollars. 100,000, 500,000. Let's say maximum, let's say $1 million at a time. A couple of million. But if you want to go into 7 figures, 10 million. 20 million, $100 million. You cannot be doing the things that we do here with that type of money. You get what I mean? You need to learn deeper things, bigger things. Yeah. And these are the bigger and deeper things. A trader that is running 50 million, 100 million hedge fund cannot be trading the way we do here. You'll be lost in the process. You need to understand. And all the lessons are here. And learn them. This is what we talk about. You hear me talking about fixed and floating exchange rate regimes. I'm talking about Bretton Woods conference. Deep things, deep things. Rick, this is all I was learning 2017, 2018. How many years from now? This is why I break down, the baskets and then weighted averages of the DXY. So DXY, this is the weight average of DXY. Euro is what? 57.6%. JPY 13%, GBP 11%, CAD 9.1%, Swedish krona 4.2%, and then Swiss franc 3.6%. That's why DXY it's embedded. The comparison. When you talk about GDP growth, you talk about major fundamentals that affect the market: GDP, inflation, unemployment, and BOP. BOP these days they don't even really affect the market as much again, right? Then we go deeply into fixed and floating exchange rate regime. There are so many insane things that we can keep talking about. Here I used to really Here I used to really track inflation rates against each other, because at that point I had come to learn that not inflation, interest rate. Interest rate is like the major mover of the market. Most people don't understand that, and I used to explain interest rate generally. They be the major mover, long-term mover. Like think about it this way: interest rate make like investment rate. Interest rate of a country is like investment rate. So if we have Ghana, we have South Africa, we have Nigeria, UK, right? Yeah. And then US is presenting, let's say, 5% interest rate. Yeah. Ghana is presenting 30% interest rate, right? You as a businessman, where would you put your money? Ghana. Why would you put it in Ghana?
The high interest rates.
But you see, that is where you are perceiving it on the shallow level, because now you have to now break down certain factors. Where are you investing from? Imagine that you are an investor from the UK, right? But you have an option of putting your money in the US, which is going to give you 5%, and Ghana, which is going to give you 30%, right? But you spend pounds in your country. You don't spend dollar. You don't spend cedis. So that means that for your investment, you would have to either change your, let's say, 100,000 pounds, right, into dollars at the current exchange rate, or 100,000 pounds into cedis at the current exchange rate, right? If you put it in the dollars, you are guaranteed of stability, because the exchange rates movement don't move a lot. But if you put it in Ghana, imagine that, yes, you invested 100,000 pounds in Ghana when the exchange rate against the dollar was 7.6. And then you are supposed to get your investment return after 1 year. You come back and the exchange rate is what? 14. It has reduced your investment. So it will now steal profit out of your 30% interest. So they have to be mathematically done before you choose to say, I'm going to put my money here. But this is what the currency market details. You get what I mean? Yeah, so those times I was heavily invested in following, interest rates, and then like comparing it against country-wise. You get me? And it will shape up the long-term trend on the market. You get the idea? Yeah. If I take pound and I take dollar, and then pound is offering, let's say, 3%, and dollar is offering 6%, I know that, dollar will be stronger against pound, because they are close related pairs. So investment will rather flow more into US than UK. Then the rest is me coming to the lower time frame and then read.
This is how to, as you said, trading the other way and hedge fund vibe, like,
of course. No, yes. This is not for like retail. Yeah, this is deeper than what you people learn. This is way deeper. So I used to, and look at the year I was learning Wyckoff. Some people think that okay, they are talking about SMC and stuff. I started learning that thing. No, be today.
No, nobody go fit you.
I started learn Wyckoff. It no be today, Rick. I started learn wave theory. Elliott wave. I know Elliott. Some people there go draw Elliott. Where I started learn that thing? Detailed. Like me, when I'm learning about theories, I don't learn about, no, I go who started it, where, what is his book that he wrote, what is his real explanation of what is his thinking process, all the way from the bottom. I understand Wyckoff. Wyckoff, he was a broker.
Really?
Yes, Wyckoff, he was an owner of a broker. Richard Wyckoff himself. The Wyckoff way people, they thought they don't know who he be. It's called Richard Wyckoff, right? And Richard Wyckoff, he was an owner of a brokerage firm, more like a prime brokerage, not a retail brokerage. Now, what happened is that because he was part of the leading, volume generators of the market, big investors and then big businesses were running their orders through his brokerage firm. That meant that he had a real-time data of how the market moves, represented on the volume that he receives. And the beautiful thing was that he was a chartist. Chartist is a technical analyst. So he could then use it to draw out the patterns that his orders will come in before some big movement will pop up. And that's how come he used that to develop the Wyckoff theory, where he would now assess what the accumulation stage of the market and then the distribution stage of the market. And when detailed into it. So if you want to take on Wyckoff, then you have to go through all this series of process and learning, upthrust, all those terms, maybe they may see into me refi but it's pretty detailed. If I want to go back, all I have to do is pick this notes, revise it, and then everything will just be really fresh. Here, see here, I draw the Wyckoff schematics itself. This is the accumulation stage of the schematics. You never see this thing before. See the way it passes the eye. This is change of character. This is 2018. 2018, I learned this thing. It not be 2020 or 2023. 2018. So sometimes if people are saying something, I just they watch out for the internet. It's just fun. This is what SMC is built on. The smart money concept and everything that people who knew about smart money. Nobody was talking about it, right? This is preliminary supply, right? The PS, and this is selling climax, and then this is automatic rally. And this is the STV WhatsApp. Medium review,
Sentimental.
Sentimental day. I've forgotten some of all these terms. I've tried my best to even remember them, And then there's also upthrust, after breakout or something. And then this is refi. Then usually we find our entry on the spring. The spring is like that last. So usually with the schematics, you're looking for 3 point drops. This 1, 2, 3 I draw here. In today's world of traders, and they use the wick to identify them. But in the Wyckoff part, it was a formation, lows, like lower low. The third lower low, you go find entry there. You get me? Yeah. Like the market drop, first low, second low, third low, then the third one, he expects the accumulation state has been ended, and then boom, the whole thing starts. So it's a lot to decipher, but the beautiful thing is that after all this, then I created my own strategy, which is